Good morning, students. Welcome back to the session on advanced accounting. So, in the last session, we were talking about AS18. We discussed about various criteria of related parties, and we also discussed about the importance of the related party transactions, related party relationships, the disclosure around it. So, today we are going to continue with our discussion in relation to AS18. Let us quickly recap all those 4 or 5 criteria which are given under the standard. First, that was through control, wherein we were talking about the relationships which are directly or indirectly through control, wherein we discussed the example of holding and subsidiary, ultimate holding company and the subsidiary. Second one was about the joint control or the significant influence, wherein we understood that the investor and the investee will be related parties. But let's suppose if there are 2 investors who have formed a joint venture, then those 2 investors will not become related to each other. For significant influence, we discussed that this is about power to participate in the decision making. And for significant influence, generally, if we have more than 20% shareholding in the investee, then the significant influence is considered to be there. Correct. Third criteria, C, that was about the individuals who are owning directly or indirectly in the voting power of the enterprise and also their relatives. Fourth was about the KMPs, wherein we discussed about CFO and CS, even though they happen to be the KMP as per the Companies Act, but they are not necessarily considered as KMP as per the requirements of AS18. And the 5th criteria was wherein we were checking whether the parties, means the persons who have this control or this KMP criteria, whether they are able to exercise significant influence or not. Yeah. So these 5 things we need to remember, on the basis of which we assess whether a party will become a related party or not, or on the basis of which we'll assess the related party relationships. Now, we can look at some exceptions. Some criteria wherein the related party relationship is not considered to be existing. So once again, if you can go to page number 1.64 of the study material. In the context of AS18, following are considered not to be related parties. Who are those parties? 2 companies simply because they have director in common. So this means there are 2 companies, A Limited and B Limited. And we are talking about B1, B2. So B1 and B2 are the directors, and both of them happen to be the directors of these 2 companies. So these 2 companies will also have other directors, means other than B1, B2. But these 2 are common in both the companies. Now, can we say that just by having common directors, I'm repeating the point, just by having common directors, A and B will become related to each other? The answer is no. We need to look at all the 5 criteria or any of those 5 criteria for A and B to be called as related parties. Just by having common director, we should not assume it may or may not be a related party. Correct? So this is the first thing which we need to remember. Once again, you can mark it as the situation of having common directors. Number two, a single customer, supplier, franchisor, distributor, or a general agent with whom an enterprise transacts a significant volume of business merely by the virtue of resulting economic independence. So just because an entity is transacting, let's suppose with a party, entering into a lot of transactions with this party for say sale. So just by having sales with a party or just by having transactions with that party, we cannot consider that party to be related. Yeah, again, we need to look at all of those five criteria. So we can say customer, suppliers, with whom the transactions are taking place in the normal course. Please remember that we are not saying that customer or supplier cannot become a related party. It's possible that they can also become a related party, but if they have to become a related party, then we need to look at any of those criteria which we discussed. Just by having significant volume of business, just by having significant volume of business, we cannot say that these will become related parties. Obviously, C is the third criteria. The parties listed below in the course of their normal dealings with an enterprise by virtue of only dealings in those transactions. Providers of finance, trade unions, public utilities, government departments, government agencies, government sponsored bodies. So third, we are talking about trade unions, providers of finance, government departments, etc. And we are saying we are dealing with them in the normal course of business. So if we are dealing with them in the normal course of business, that will again not make them a related party. And here again, please remember that they may become a related party, but for them to become a related party, we need to look at that criteria. Just by having these parties and just by having transactions with these parties will not make them a related party. So these are the three parties who are deemed not to be related. So this is deemed. Correct? So that means this is not a related party, this is not a related party, this is also not a related party. Understood? If you will ignore all of these three criteria, let's suppose these 3 points that we have discussed, even if you forget it, even if you ignore it, it's absolutely fine. Why? Because every time we assess whether a party is related or not, but we need to check those 5 criteria. And anything other than those 5 criteria will not be sufficient to make any party as related party as per ASAP. Clear? Clear on this? Okay. So now, in relation to a related party, let's understand what all transactions are possible. And then we'll pick up some examples. Transactions with related parties. So now, which all transactions can be considered as the one which are required to be disclosed? Now for this, there's no rule which you need to understand. One simple point which you need to remember is any sort of transaction which would have taken place with a related party is required to be disclosed. Now, examples could be sale, purchase, okay, say lease, anything, any transaction that we carry out with a related party will be required to be disclosed. Say for example, loan given, loan taken, any transaction, any other transaction. Okay. Now, with the transactions, there are two things which we have discussed about the disclosures. One, that is about the transaction which would have taken place during the year. And second, would be about the outstanding balance in relation to that transaction which is possible. So now, whenever we give a disclosure of related parties, both are required to be disclosed. So we'll not go by only one of those criteria, or we'll not say that because the transaction has been disclosed, so that's why outstanding balance will not be disclosed, or just because outstanding balance has been disclosed, so that's why transaction will not be disclosed. Both of them are required to be disclosed. Okay. So we can also look at some of the transactions which are required to be disclosed along with the balances. The first, say loan is given, and this loan is given by A to B. Both of them are related parties. This loan was given on 1st June 2020. Correct? And after 1 month, this loan has also been squared off on 30th June 2020. This loan is also squared off. It's repaid by B to A. Now, if you look at the year end or the reporting year 2020-21, as at 31st March 2021, if we are looking at the financial statements of A Limited, do we have any outstanding balance in relation to this related party? No. So the outstanding balance is nil. But during the year, two transactions have taken place. One on 1st of June and second is on 30th of June. Now a question may arise that because the transactions have been squared off, nothing is outstanding. So do we need to disclose it? The answer is yes. Even if the transaction is squared off, it doesn't mean that the transaction has not taken place and which is not required to be disclosed. In this scenario, because the transaction has taken place and this has also been squared off, so that's why both the transactions are required to be disclosed in the disclosure of related parties. Okay. So now, in the financial statements, when we will disclose related parties, so what is the first disclosure that will come? B Limited. Say B Limited is its subsidiary. So this is the disclosure that will see. Number one. First is about the related parties, means the names of related parties along with the relationship. So B Limited will be disclosed and its name will be disclosed. Second thing will be about the disclosure of transactions. Now, in relation to transactions, A Limited will disclose loan given, then loan received back. Okay, so two transactions will be disclosed with the dates, of course, and this will be in respect of B. This will again be required to be disclosed. Now, by chance, we don't have any outstanding balance, so that's why nothing will come as around the outstanding balance. But let's suppose if the loan was given amounting to rupees 1 lakh and the repayment has been made during the year itself amounting to 90,000. In such a situation, in relation to transactions, 1 lakh will be disclosed, 90,000 will be disclosed, and now we don't have the nil balance. Now the balance as at year end is 10,000. Okay, so that's why in the financial statements of A Limited, another disclosure will be given. First, related parties, second, transactions, and third will be the balances with related parties, wherein balance of B Limited amounting to rupees 10,000 will also be required to be disclosed. Okay, so that will also be required to be disclosed. So all of three disclosures will therefore come in the financial statements. Fine, clear on this? So this is all about the disclosures which are required to be given in the financial statements. Now we can move on to illustration number 1 on page number 1.67. We can move on to this illustration and start solving this. Page number 1.67. Illustration 1. We can start solving this. In this illustration, we are required to identify the related parties in the following cases. A Limited holds 51% of B Limited. So A Limited holds 51% of B Limited. B Limited holds 51% of O Limited. So A then B holds 51% of O Limited. Okay. Then Z Limited is also there, which owns 49% of O Limited. Then we have Z Limited. This owns 49% of O Limited. So this is the structure, we can say. Yeah. Now, whenever A will require, whenever A will give the names of its related parties, that means for A Limited, can you tell me the names of the related parties? For A, let's suppose if we are preparing the financial statements of A, so which all parties will become related parties of A? Quickly, over to you. So for A, which all parties out of this will be related to you? Quickly, you can answer this. There are three parties for which you need to make this assessment. Okay. For A, which all parties will be its related parties? Okay, Sakshi has answered this. Sakshi is saying B and O. Can you also let me know the relationship? If you're saying B and O will be the related parties, what is going to be the relationship? Okay, Anushka has also answered the same thing, B and O. Sanjay is also saying B and O. Manish is also saying B and O. So let's understand. B is the entity over which A holds 51%. So which means A will have control over B. So that's why for A, B will be a subsidiary. Or we can say a direct subsidiary. So A will have direct control. A will have direct control. For O, here again, A will have control, but that control is not direct, that is through intermediate. Who is the intermediate? B. So that's why O will also be a subsidiary, but it will be through indirect control and not through direct control. Clear? Then I can see a lot of responses from you. Rama is saying B and D. I think it's B and O. Kamal, Atul, they are giving the same answer. Jameel has also added Z for this. So Jameel, what is the relationship that you will establish for Z? Can you please clarify? If Priyanka is saying A and B are related parties, O is also a subsidiary of A. Great. So she is also saying B and O. Rangajula is also saying B and O. Sakshi is saying subsidiaries. Namrata is also saying B and O. Nakul and Jameel are saying B and O. Jameel is saying there is an indirect relationship with Z. No. For our purposes, we don't need to check the indirect relationship. We need to check whether the indirect relationship is the one which is covered under AS 18 or not. Yeah? Okay? So now, if you look at Z, can we say A will be able to indirectly control Z? No. Who is Z? Z is an investor. So if you look at O, in O, two companies have made the investment, Z and B. So Z is an independent investor. There is no relationship between Z and A. Clear? So Z is not a related party. Okay? Clear? Now, if you look at the related parties of B, yes. Now, if you can answer for B, which all parties will be the related parties? Sana has also answered B and O. Okay. For B, which all parties will be its related parties? Quickly. For B, which all parties will be its related parties? Okay, Anushka is saying A as a holding company and C as a subsidiary. Okay, great. So A Limited is the one which is the holding company. Means one who exercises control over B. Exercises control over B. Next is O. O is clearly a subsidiary of B. O Limited, and O is what? Subsidiary And in this subsidiary, O has got direct control. Clear? Yeah. O has got direct control over this subsidiary. Yeah. And I think same are the responses from so many. Kamal, Namrata, Abdul, they are giving the same answer. Sana, Manish, Priya, Nakul, Ramakrishna, Priyanka. Great. Okay. Now, for O, now we are looking at it from the perspective of O. So for O, which all parties will be related parties? For O limited, can you tell me which all parties will be related to O? For O, which all parties will be related to O? Quickly. I think for O, it is quite simple. Yes or no? So for O, okay, great. So Priyanka has answered this. Priyanka is saying, first of all, it's B, then Z, then A. Okay. So if you look at O, O is controlled by B. So B becomes its holding company. So B, holding company. Because there is control. Yeah. Then if you look at A is also having indirect control over O. So that's why A becomes its ultimate holding company. Having indirect control. And if we look at Z, now Z will also get into the picture. Why? Because Z has got stake in O, 49%. So maybe Z has got joint control, or Z may have significant influence. At least significant influence will be there. At least. Yeah. So Z will also be a related party. But currently we can't comment about Z, whether Z has got joint control or it's about significant influence. We can say at least significant influence is there. Correct? Yeah? Okay, great. So now, for the last one, for Z limited, if we have to assess which all parties will become its related parties. Can you now tell me for Z? Okay, I think for O, I'm still receiving the answers. Priya, Nakul, my saying EDC. Okay, great. Shahana has also answered this. Namrata, Ranganjula, and Sushira was answered. Okay, so now, if you can move on to this last one, please. For Z, which all parties will become its related parties? For Z. Most cases for Z, it should be, I think she tried saying O. It's not C, O. Okay, great. Sakshi and Priyanka are also saying O. Priya is also saying O. Yes, very good. So for Z, there's only one company to which it is related out of this structure. It's O. And why? Because O is an investee, or we can say at least associate. Why we are saying associate? Because the shareholding is more than 20% in O. So at least significant influence is there. That's the minimum thing which you can see. Nakul is also saying the same thing. Poonam is saying O is holding. No, O is not holding. O is the associate. Anantraman is also saying O. Prupasmita is saying O. O. Great. Very good. Manish is saying O if a joint venture. It may or may not be, but at least the significant influence is there. Ramakrishna is also saying O. Then Atul is saying for O, we can say it's less than 51% but more than 20%, so that's why it's associated. Great. Poonam is saying O is holding. No. So it seems that you are clear on the related party relationships, which is good. Then Akshay is saying, okay, Akshay is saying O limited. Okay, very good. So now we can move further and we can look at some of the disclosures which are required. Even though we talked about it, but still you should know about some of the disclosures which are important. You can move on to page number 1.68. The disclosures which are given: name of the related party, nature of the related party relationship is required to be disclosed, irrespective of whether there is a transaction between the parties or not. So the disclosures which we give: first, name and relationship. Where control exists. Name and relationship where control exists. Control exists means holding subsidiary. Now let's suppose A and B are holding and subsidiary. See this one. A holds 60% shares of B. So that's why A will be a holding company, B will be a subsidiary. Now in this case, standard says even if during the year there was no transaction between these two. So the transactions between these two during the year were none. There is no outstanding balance of A in respect of B. It's nil. Even then, the disclosure of name and relationship should be given. Why? Because the relationship between these two is that of control. So wherever there is a control, we're not talking about joint control. Wherever there is control, then irrespective of the amount or irrespective of the fact whether the transaction is there or not, disclosure has to be. Yeah, so we can say this is first category. Whether there is a transaction or not. irrespective of the fact that the transaction is there or not. Number two is about the disclosures which are required to be given only when there is a transaction. When there is a transaction or outstanding balance. Now, what are those disclosures that are required to be given? First is about the name, relationship, so you can say C Limited, which is an associate. So name C Limited, relationship, associate will be specified. Description of the nature of transactions. Description of nature of transactions means whether there's been sale, purchase, say salary given, whatever is the nature. And with the amount, volume of transactions either as an amount or as an appropriate proportion. But generally what you see is that the amount is disclosed. Generally what you see is amount is disclosed. So volume is the next thing that you disclose as a proportion or amount. Either you give amount or proportion. Okay. Number 4. Any other elements of related party transactions, if we deemed it necessary, which is generally not there, because if you have disclosed the description and the amount, then it will take care of it. Amounts or appropriate proportions of outstanding items pertaining to the related parties at the balance sheet date are required to be disclosed. So now when we are talking about all of these disclosures, we are not limited to only the transaction during the year. Basically, there are two disclosures we are giving. A is transaction, B is the outstanding balance. Both of them will go. Okay. Further, it says items of a similar nature may be disclosed in aggregate by type of related party, except when such disclosure is necessary for understanding of the effects of related party transactions. Remuneration which is paid to the KMP should be considered as related party transaction. In case of non-executive directors who are not the related parties, the remuneration paid to them should not be considered as related party transaction. So now this is about the disclosures as around the KMP, just for the purposes of clarification. You may note down. As per this standard, if you look at the criteria, what do you know? KMP means a person who has got authority, responsibility in relation to planning, directing, controlling of the activities of the enterprise. Correct? If you look at the assessment as per this standard, if you are saying that directors are the KMPs, yeah, because KMP can also be a non-director, means it's a CEO of the company. Now, for a director, again, there are two categories: executive directors and non-executive directors. Non-executive directors are not considered as related parties as per this standard. Only the executive directors are considered as related parties. These are not related parties. Okay. Yeah. So this is something which you need to remember. Matish is asking, is there any amount limit for the related party transactions? No. See, this standard doesn't prescribe any limit which an entity will put for a related party. There is no limit which is prescribed by this standard. This standard simply says that whatever is the amount which you would have transacted with the related party, disclose it. That's it. Alright? Clear? Okay, so we can pick up another illustration now. This is page number 1.69. Illustration given at the end of the page. Narmada Limited sold goods for 90 lakhs to Ganga Limited during the year ended 31st March 81. Narmada Limited sold to Ganga Limited. Okay. Goods worth of rupees 90 lakhs. Managing Director of Narmada Limited owns 100% of Ganga Limited. Now, over Ganga Limited, if you check, 100% ownership of Ganga Limited is with the MD of Narmada Limited. Okay. The sales were made to Ganga Limited at normal selling prices. Chief Accountant of Narmada Limited contends that these sales need not require a different treatment from other sales made by the company, and hence disclosure in respect of this sale by Narmada to Ganga Limited is not required to be given. You are required to comment whether this assessment of the chief accountant of this company is correct or not. So that's why in this example, first of all, you need to assess whether Narmada Limited and Ganga Limited are related parties or not. If yes, how are they related? And if they are related, what is the disclosure that is required to be given? So over to you, quickly. If you can answer this, all the 3 points with the explanation, if possible. Quickly. Quickly, if you can answer this, I'm waiting for a response. Yes. So first of all, you need to check whether it's related or not. If yes, how is that related? And if you say it's not related, why it's not a related party? And the moment you say it's a related party, what is the disclosure that is required to be given? Without looking at the solution, if you can answer this. Okay, great. I received a couple of responses from Rama and Krish and Sanjay. Rama is saying KMP of Narmada Limited is also the MD of Ganga and hence they are related parties. So are you trying to say that the directors are common and that's why they are related parties? This will not be appropriate. Sanjay is saying they are related parties. Why? Because KMP, who is the KMP? KMP of Narmada holds 100% shares in Ganga. That is, it's the MD of Narmada who holds 100% shares. For us, what is the important criteria? For us, the important criteria is to go as per the requirements of the standard. And as per the standard, there are 5 criteria which have been given. So we need to apply any of them. And if any of them gets applied, then it's a related party. Priya is saying it's a related party. Matish is saying indirect relationship is there. Atul is saying related party. Manish is saying they are related because Narmada Limited controls Ganga Limited indirectly through PM. Very good. Rangajula is saying they are related parties. Anand Raman is saying they are related because director is having control over Ganga. That sales should be disclosed. Okay. Anushka is saying they are related party. That's why disclosures will be given, irrespective of whether the transaction is done at the normal selling price or not. Kamal is saying MD controls Ganga. So I think, as you rightly mentioned, they are related parties. No doubt about it. Are they related parties? Answer is yes. What's the criteria basis which they will become related parties? Now, this is very, very important, for which I have received very few responses from all of you. The criteria is criteria number E. If you remember, we discussed points A to E in the last session. Now, on the basis of which criteria you will say they are related? Most of the responses which I have received from you, you are saying because MD controls Ganga, that's why they will be related. That's not the solution. It's a fact which is given in the question only. MD controls Ganga is a fact. But if the MD of Narmada controls Ganga, then what is the criteria of AS18 which will make them as a related party? That is something which you need to put down in your solution. Okay? Here. And what is that criteria? Criteria number E. Basis which you will call them as related parties. Clear? Yeah? And therefore, when Narmada Limited will give the disclosure, Narmada Limited will say Ganga Limited is a related party and the sales are made for these 90 lakhs. So that's the disclosure which is required to be given. Yeah. Then I think Sana has also answered the same thing. Okay, great. So with this, we come to an end to our discussion in relation to AS18 also. And we can now move on to the next standard, AS17. And before I move on to that standard, if you have any questions, any doubts, please let me know. We can discuss that part before I move on to the next standard. Yes, quickly, over to you. Yes, any questions, any doubts in case you have? Quickly, over to you, queries now. Please let me know. Are you all clear on this? Then we can move on to the next standard. Next is AS17. Let me just see if you have got any queries. Anantraman is clear on this. Sakshi is also clear on this. Yeah, any more queries? Anushka is asking who is a simpliciter director. You can say non-executive one, the one who is only involved in the meetings, etc., and the one who doesn't get paid means the remuneration. Yeah. Okay. Any more queries? No. Rama is clear on this. Manu, Anushka, they are very clear. Okay, great. So then I think we can move on to the next topic. A17 talks about segment reporting. Or you can say, once again, we have a standard which deals only with the disclosure requirements. So this deals only with the disclosure requirements. So that means similar to AS18, the related party standard which we discussed. We are not going to cover anything in relation to recognition, measurement, presentation in this standard. Why? Because this standard doesn't talk about any of these. This is once again a standard which is only for the disclosure requirements. Yeah. Now, first of all, we should understand the meaning of a segment. Only then we will understand what is required to be disclosed or what is required to be reported in relation to a segment. So let's understand about segment. So you can go to page number 1.50. Now, before I get into the technicality, I'll just quickly tell you broadly what would this standard cover so that you can get a feeler of what is it that we are going to discuss now. Yeah. So just give me a minute. So let's take an example. So there's a company which has been dealing into multiple things. So let's suppose this company has got diversified business. See, it's Manish Limited, and this company is dealing into trading of chemicals. Number one, this company is also having diversified business. This is involved in manufacturing of furniture. Third, this company is also involved in trading of furniture. Okay. Now, when you prepare the financial statements of this company, you will see a single profit amount, a single sales amount. Whereas, if you go deep down into the understanding of the business of the company, you will understand that the company's business is not limited to only one. So the company has got three businesses. And it may happen that out of these three businesses, this business is most profitable. This is most profitable. And this business is the one which the company has just started. Okay, so there are no profits, it's only the losses. Because company has just started this business. And this business, this third one, is profitable, but the profits are not huge. Very nominal profits. Correct? Say in this business, the profits were 15 crore. And in this business, there was a loss of 2 crore. And in this business, there was a profit of, say, 25 lakhs. All in all, this company would have reported a profit of 15 minus 2, 13 plus 0.25. 13.25 crore. So this is the profit which this company would have reported. Now, actually, if you look at the situation of the company, this is a loss-making business. This business is again not very profitable, but this business is the one which is actually taking care of this entire company as a whole. So now this disclosure, which captures the information of not the company as a whole, but the company divided into these three businesses, so that the users of the financial statements get to know about this situation of the company. Because it may happen that this business is also, let's suppose, running into losses. This is also running into losses. Only this business is profitable. So that's why it's important for the users of the financial statements to know that in a company, there are a lot of businesses which are going on, but only one is the profitable business. Yeah. Currently, let's suppose the profit of this company in this business, let's suppose it's only 3 crore. So this was 3. And let's suppose this is into losses for years. This is also into losses. Let's suppose there is a loss. 50 lakhs. So both the businesses are into losses. The company would have reported a profit of 50 lakhs. Any investor, any user of the financial statement would think that this company is very profitable. Why? Because year on year, company has been making profits. But actually, if you look at the company is not profitable. Only this unit is profitable. Whereas these 2 units have been incurring losses year on year. Yeah. So that's why it's important for the users to give this information, which is possible by giving a disclosure about all of these 3 businesses of the company. Understood? Yeah. Similarly, there can be one more way to understand this. Let's suppose company has been operating in 2 geographies. So the company is dealing into only one product, but this product is sold in India as well as outside India. Let's suppose the third division is not there. Okay. Let's suppose the third one is not there. And now, in relation to this company, we see that the profit in relation to geographies which are outside India is 1 crore. Whereas in India, the company has been making losses. 50 lakh was the loss. So all in all, this company would have reported a profit. But if you look at the geographies, you will understand that the company is not fully profitable. Clear? Clear on this? This is another way to look at the segments. When we looked at various businesses, in such a situation, we considered 3 business lines for which disclosure should be given. So those 3 business lines are considered as 3 segments into which a company can be divided. And we can give the disclosure of all 3 segments. Maybe the profits, revenues, or whatever it is that we'll discuss. Another way to give the disclosure could be not to go by the nature of the business. Instead, go by the geographies in which the company operates. Something like this. Wherein we've got 2 segments. So this is the first segment. This is the second segment. Segment means the categories into which you are trying to bifurcate this entire business of the company or the entire operations of the company. Yeah? Clear on this part? So this is broadly about the standard. So all of these examples that we have discussed, idea was just to make you understand as to what is it that we are moving forward. Okay. So now we will get into details of all of these items, picking up one by one. So first of all, we will understand about the segment, and in relation to a segment, when would a segment be considered as a big business segment or a geographical segment? First, a business segment. What do you mean by a business segment? For a segment to be called as a segment, you can refer to page number 1.50, please. For a segment to be called as a segment, it's important that it's a component of an enterprise which is distinguishable. Matish is asking, sir, is there any turnover or profit level? Let's understand all of these points. So Matish, you will automatically get the clarity. We've just started off. There are a lot of points we'll have to understand. I think this point will automatically become clear on this. Okay. If we are considering a segment as a business segment, then what are the things that we need to look into? First, it should be a distinguishable component that is engaged in providing individual product or service or a group of related products or services. And so first, I'm saying distinguishable component. Number two, a very important point, that component is subject to risks and rewards that are different from other business segments. Subject to risks and rewards different from other segments. For example, when we talked about manufacturing of furniture, the risks and rewards which are attached to that business are different from the one which will be there in case of trading of furniture. Okay. Now, there are certain factors which we may consider in determining as to which all products or services are related. Means, how do you assess a segment as a business segment? You can do it on the basis of nature of products or services. So all of these means both of these can be done by nature of product or service. Next, nature of production process. By looking at the nature of production process. Type or class of customers. Type or class of customers for the products or services that we have. Methods used to distribute. So distribution methods we may be having. Then, if applicable, nature of regulatory requirements. For example, banking is a separate business line. Insurance is a separate business line. Why? Because they are subject to different regulations. Yeah. So on the basis of regulations, also we can say businesses can be considered to be different. Okay. Now, these are some of the criteria or factors which you can consider for assessment of a business segment. Please remember that in this entire standard, the most significant part is going to be the assessment of a segment. Okay, because similar to what we saw in case of related parties, once a related party is identified, then it's very easy to put the information against that, because we'll know. Say for example, B Limited becomes a related party. So we'll know what all transactions would have taken place with the related party. What is the outstanding balance in relation to that related party B Limited? But if by chance you are not able to assess whether B Limited is a related party or not, then of course you will not be able to move further. Yes or no? Same principle you can say will apply over here. Here again, the most important part for you will be to assess the segment. Because once you assess the segment, then the information which is required to be disclosed for that segment will be very easy. Otherwise, if you don't know the segment, what information you will try to just collate or gather for that segment, it's very, very difficult. Yeah. Another thing, in relation to a segment, at times it may happen that you are getting confused whether it should become a segment or not. So that's why whenever you get into this assessment of segment, one thing which you should always focus on is to check whether the risks and rewards to which that segment is subject to are different from the risk and rewards of the other segment or not. Okay. Secondly, when we talk about distinguishable component, so when would you say a component? So we are talking about a component of an entity. In our example, what were the components of an entity? 3 components were there: trading of chemical, trading of furniture, and manufacturing of furniture. So these were the 3 components which we consider as 3 segments also. Now, when you say those have to be distinguishable, what does it mean? Means those should have their independent operations. Those should have their independent financial information. Means their assets, liabilities, their information related to profits, losses, revenues, expenses should all be identified separately. At the company level, you will definitely give the information for all 3 taken together. But if required, you should have the separate information for all of them. Something which you see in case of a branch. So a company having 5 branches will have separate financial information for all the branches. Correct? The same is the case which you need to consider over here. So they have to be distinguishable, having different risks and rewards. And what are the factors basis which you will say segments will become business segments? On the basis of products, services, production processes, on the basis of customer category, distribution methods. Another example, if you can take, say a company is dealing into 3 products. Say the company is dealing into sale of tiles. So it's all tiles, nothing else. The company manufactures only tiles. But there are 3 types. So the company is having 3 products. Now, can we say, even though company is manufacturing only one category, yeah, broad category is what? Tiles. Still the company can have the business segments? The answer is yes. Why? because within that particular category, the nature of products could be different. So it can be product A, B, or C. Clear? Clear in this? Yeah. Aditi is asking, sir, would Manyavar and Mohe be considered different business segments? The nature of product is same, but the customer categories are different. See, I'm not sure about Mohe. So now the moment you say their customer categories are different, you say one particular type of product caters to only one categories of customers. Say these are the premium customers, or these are, say, expensive products which everybody cannot buy. And second is the category of customers which is available at a very economical rate. Yeah, so there are two different set of categories of the customers to whom you are catering to. So that can definitely become the basis for considering those two categories as those two segments. Okay. Any more questions in case you have on this? Really, if you have any more questions. No? Clear on this? Clear on this part? Okay, great. So then we'll move further. So as we discussed, one of the bases for determining the segments is by the nature of products or services or by the nature of business. In broad terms, we can say nature of business. Another way is to look at the business on the basis of geographies. Wherein we will call such segments as geographical segments. For geographical segments, once again, the component should be the one which is distinguishable, which is engaged in providing products or services within a particular economic environment, and that is subject to risk and rewards that are different from other economic environments. Different from other economic environments. Generally, you will see by economic environment, it would be the countries, it could at times be states or the regions. Say, for example, northern region and the southern region may be completely different. Why? Because the customer categories over there would be significantly different. Manish is asking, sir, in airlines, customer categories are different. Economy class and business class, of course. Sahana is asking, so can we take Reliance Private as business segment as it has different forms such as Reliance Fresh, Jules, etc. See, these can definitely become the basis. Sanjay is asking, sir, is segment reporting done even if company prepares consolidated financial statements? The answer is yes. Okay. Clear? Any more questions? Then I will continue my discussion on the geographical segment. Shall I move further? Okay, great. So now, in relation to geographical segments, what are the various factors that you will consider? First, similarity of economic and political conditions. Here you can just change it. Similarity of various political or economic conditions. Economic and political conditions. The relationships between operations in different geographical areas. Third, proximity of operations. Third is proximity of operations. Fourth, special risks associated with operations in a particular area. Fifth, exchange control regulations and any currency risks if there are. Exchange control regulations, currency risks. If there are any. So these are the factors that you will consider while determining a geographical segment or while assessing whether a segment will become a separate segment on the basis of geographies or not. Now, so far, what we have tried to understand is only about the meaning of a segment. So you can say that a company may have two types of segments, or there are two ways in which segment can be there. One on the basis of business and second on the basis of geographies. Correct? Now let's suppose on the basis of business, a company has identified 5 segments. On the basis of geographies, a company has identified 7 segments. Yeah. Now question will arise whether the information is required to be reported in respect of all the business segments, all the geographical segments, or is there any further criteria around this that we need to understand? So now let's try to get onto that part, which is also called as reportable segments. Reportable segment. Reportable segment means the segments for which reporting is required to be done. Let's say a company has got 6 business segments. Segment 1, segment 2, segment 3, segment 4, segment 5, segment 6. It is possible for a company to have various segments. And there are a lot of examples which you gave me. basis which it's very easy to say that they will become business segments or the geographical segments. But the important point is, do we need to report the information separately in the financial statements for all of these segments? The answer is no. We will report the information only for those segments, whether those are business or geographical segments, but only those segments which are considered as reportable segments. So only when the segment will become reportable, we will give the disclosure, otherwise not. So you can say it's the step number 2. So the first step for us therefore is what? To identify the segments on the basis of business or the geographies. Once the segments are identified, then the next step is to check whether those segments will become reportable or not as per the requirements of IAS 17. Okay. So now let's understand what is this criteria of a reportable segment as per IAS 17. So we can now move on to this criteria for a reportable segment. Yeah, quickly, if you can go to page number 1.55. Reportable segment. A business segment or a geographical segment should be identified as a reportable segment if and only if. First, so there are few criteria. Let's understand those criteria. First, A, its revenues from sales to external customers and from transactions with other segments is 10% or more of the total revenue, external and internal, of all segments. The revenue of a particular segment is greater than or equal to 10% of all the segments. Now in this case, there are few points which are very, very important for you to understand. First, when you are looking at a revenue of a segment, say there are 6 segments, S1, S2, S3, S4. So you are now checking what is the revenue of the segment number 1. Let's suppose this comes out to rupees 50. And the total revenue of all the segments taken together is 100. So can we say that this is greater than 10% of all? The answer is yes. So in this case, S1 will become reportable. Okay. Now in this case, the question which arises is that how do you determine this rupees 100? This is very, very important. Standard says the revenue from sales to external customers means sales outside the company and from transactions with other segments. Means if there has been any sale within the company between the segments, means segment 1 has sold to segment 2, segment 2 has sold to segment 3, segment 3 has sold to segment 4, segment 1 has sold to segment 5. If such type of sales are also taking place, those are also required to be considered. Okay. External as well as internal, both of them are required to be consider. Yeah, all the segments revenue, and this revenue is external plus internal. You may be thinking, but how can we take internal revenue, sir? For the purposes of assessment, for the purposes of determining the reportable segment, you will be required. So I'm not saying you will take this information to the P&L. For the purpose of checking whether a segment will become reportable or not, you will do this. Okay. So this is criteria number 1. Second criteria says over. So either we can say a segment will become reportable segment on the basis of this criteria. Means by comparing its revenue. Or means if the segment's revenue is not more than 10% of total segment's revenue, then we can check one more criteria. What's the second criteria? Second criteria is its assets are 10% or more of the total assets of all segments. Assets of a segment 10% or more of all the segment assets. So now instead of revenue, what are we comparing? Assets. So S1, S2, S3, S4, S5, S6, they all will have assets bifurcated into them. So we are checking for S1. Let's suppose if the total assets are 30. And if the total assets of all the segments taken together are say 110, then here again we'll say that the assets of S1 are greater than 10% of total segment assets. So that's why S1 will become reported. Now this is also possible that a segment becomes reportable as per criteria number A as well as B. We are not required to check each and every criteria. Even if one of the criteria is met, that particular segment will become a reportable segment. I am repeating this one. Even if one of the criteria is met, a segment will become a reportable segment. Okay. Criteria number 3. So if segment doesn't become reportable as per criteria number A, as per criteria number B, then we can look at criteria number C. So we are saying or. After B, you can say or. What's the criteria number 3rd? It's bit tricky. Okay, it's bit tricky. So that's why I need your attention. I can understand that you are looking for a break. Don't worry, immediately after completing this criteria, we'll go for the break. So don't worry about the break. I need your attention. The results of the segment. Results for the time being, we can say profit or loss of the segment. Segment result. Segment result is 10% or more. Again, the same thing is greater than equal to 10% of combined results of all the segments in profit. Combined results of all the segments in profit or combined results of all the segments in loss. Of all the segments in loss, whichever is greater out of these two in absolute amount. Whichever is greater in absolute amount. I'm sure you won't have much clarity around this. Okay, so that's why I'll just bring in one example. And as I told you, please don't worry. I will not take too much time. Say we have got 6 segments: S1, S2, S3, S4, S5, S6. This segment has a profit of rupees. This segment has a profit of rupees 15. This segment has a profit of rupees 15. Okay. This segment has a loss of rupees 10. This segment has a loss of rupees 5. This segment has a loss of rupees 20. Now, for us to check that whether on the basis of segment results criteria, S1 will become reportable or not, then what do we do? We will take the result of the segment. What's the result of the segment? 10. Now 10 has to be greater than or equal to 10% off. 10% off. First, combined results of all the segments into profit. So which all segments are there into profit? 1, 2, 3, 4. So 10 plus 15 plus 15, 30, 40, 60. Of 60 or the segments which are into losses. These 250, we need to pick up its absolute amount, or 15. So we take 10% of 60 or 10% of 50. Sorry, 15, whichever is higher. Whichever is higher. So out of these two, what if I even take out of these two, which one is higher? 60. So I remove this. So 60 I'll pick. Now 10% of 60 is what? 6. So is 10 greater than 6? The answer is yes. So that's why S1 will become report. Clear? So this third criteria is a bit tricky. So that's why you need to have a lot of clarity around this third criteria. If you want any questions, any doubts around this third criteria that I have discussed, please let me. Then we'll go for the break. So now, for a segment to become reportable, what are the 3 criteria? Either A or B or C. If any of these criteria is met, then we'll say yes, it's a reportable segment. Otherwise, no. otherwise not. Okay, clear on this part? Yeah, clear on this part? So I think if you are clear, then we can now take a break. Yeah. So let's go for the break. In the meantime, you can just go through this part if you're not going for the break. And if you've got any questions, any doubts, just put across your query. Okay. Yeah. Fine. So let's take a break. After the break, we will continue with our discussion on this. Hi, welcome back. So before I move further, I can see some of your queries related to this example. Aditi is asking, sir, in this example, will segment 5 and 6 not be reported? So if we'll assess segment 5, this will not be reported because I think this is the computation, it will not get covered. But 6 will get reported because if the one which is having profit of 10 is getting covered, 20 will automatically get covered. Okay. The Ramakrishna is asking, S2, S3, S6 are also reportable segments. Sir. Of course, you can check it out. So I'm not analyzing it one by one. So if you have any specific query, please let me know. Okay, great. I think we have solved this. Okay, great. Sanjay is asking, sir, in this example, S1, S2, S3, S6 are reportable. S4 and S5. See, S5 I'm sure will not be reportable, but S4 will be reportable. So let's check about S4 also. What is the loss of S4? 10. So we'll make it absolute value. So S4 will make absolute. The remaining figures will remain the same. So therefore S4 will also become reportable. Okay? You will have to compare the absolute amounts always. Manish is asking, sir, in this example, S5 is not satisfying the criteria, and all are satisfying. Even this we have to show. Even then we have to show S5 separately. So I'll come to this point. So there is another thing which we need to consider as around the reportable segments over and above what we have discussed so far. So that's why we can get on to that point also. But first of all, if you have any further confusion on any of these points, we can talk about it. No? Okay. So now, I'll just keep summarizing in this standard because things can be a bit tricky. What was the first step? Identification of a segment into a business segment or a geographical segment. What's the second step? Second step is to check out of those segments which segment will become reportable and which segment will not be reportable. Okay. For which 3 criteria are given. If any of these 3 criteria is met, then the segment will become reportable. Yeah. Over and above these 3 criteria, there is another assessment which is required to be done. Let's understand that. There is another assessment which is required to be done. If the total external revenues attributable to reportable segments constitute less than 75% of the total enterprise revenue, additional segments should be identified as reportable, even if they do not meet 10% thresholds, until the time we reach up to the 75% criteria. Okay. So let's understand what does it mean. S1, sorry, just put down this information. The total external revenue attributable to reportable segments. Total external revenue attributable to reportable segments. Yeah, should be at least 75% of total enterprise revenue. Total enterprise revenue. Now you can say step number 3. In step number 3, after checking, or you can say after determining the reportable segments, we need to check what's the total external revenue of the reportable segments. Total external revenue of the reportable segments. In our example, we were having S1, S2, S3, S4, S5, S6. Yeah? Let's suppose the reportable segments out of this has total external revenue equal to 75% of the total enterprise revenue only. By chance, out of the reportable segments, in our example, there were 5 reportable. Let's suppose in another case, we have got 8 segments, out of which this one, this one, this one, and this one. 4 have become reportable, whose revenue is 70% of the total enterprise revenue. So that means if you look at total external revenue of S1, S2, S3, S5, it is equivalent to 70% of total enterprise revenue. But as per the standard, external revenue of the reportable segments should be at least 75%. So we are short by 5%. So in such a case, standard says that if it is short by 5%, means this one, this one, this one, this one. Out of these 4 segments, you need to pick up more segments, make them reportable, so that you are reaching at least 75%. Yeah, so it has to be minimum 75. You may be thinking, sir, what is the logic of that 10% threshold then? The logic is very clear. 10% threshold will determine the reportable segments. But after that, if it is 75%, we'll stop and we'll say only those segments are reported. But in case, after checking those thresholds, we are into this sort of situation, then over and above S1, S2, S3, S5, which have been selected as reportable on the basis of thresholds, we will also have to add more segments and call them as reportable, such that this becomes 75%. Okay, so maybe just by adding one segment, it may touch 75%. Maybe we need 2 more to make it 75%. It can be either way. Now another question may arise, sir, out of the remaining segments, how do we choose which one is required to be picked up? Is there any criteria out of these remaining one? No. Standard says this has to be judgment. Whichever the management believes is the most appropriate to be disclosed as reportable, for the users of the financial statements that should be disclosed. So for this remaining part, management judgment will come to the picture. Clear? Clear on this point? Yeah. So you can say that after assessment of segments, there are two steps to determine the reportable segments. First step is based on threshold of 10% on revenue or assets or results. And after this, another test is required to be performed. That external revenues of the reportable segments selected as per threshold should touch at least 75% of total enterprise revenue. Okay. So what I would suggest is, in the previous assessment, okay, previous assessment means wherein we mentioned the thresholds, write step 1. Write that as step 1. Step 1 for determining the reportable segments. And this will become step 2 for determination of reportable segments. And please note that step 1 and step 2 both are required. Because even if we say that S1, S2, S3, S4 selected on the basis of threshold make 80%, still we are required to perform this test to check whether it's 80 or not, or whether it's greater than 75 or equal to 75 or clear? Clear on this part? Yeah? Clear on this part? Any questions, any doubts? In case you have on this, please let me know. Clear on this part? Yeah? Okay, so some more points which you can note down. A segment, let's suppose, in the previous year, S1, S2, S3, S5 were the reportable segments. And they got reported in the financial statements. Now, in the current year, again we'll perform the same assessment. Now, what do we find? That S5 was reportable in the last year, but in the current year, it's not coming out as reportable. Standard says a segment which is identified as reportable in the immediately preceding year, because it met the threshold of 10%, should continue to be reportable irrespective of meeting the threshold in the current year. Yeah. So if a segment has been disclosed as reportable in the previous year, that will also be disclosed as a reportable segment in the current year, irrespective of checking the threshold. Yeah. Next, if a segment is identified as reportable in the current year because it specifies 10% threshold, preceding period segment data that is presented for comparative should also be reflected in respect of that segment. Means, say last year, 3 segments were reported. 1, 2, and 3. And they touched 75%. Now, in the current year, 4 segments are becoming reportable. 1, 2, 3, and 5 on the basis of 10% thresholds. So now, in the current year, when you will give the disclosure of S5, you will also be required to put some financial information against it. What is going to be that financial information? We'll talk about it slightly later. We'll put some financial information against it. Now the question arises that because this was not reportable in the last year, So now when we present the information for the current year, do we also need to give its comparative? The standard says yes. The comparative information for this segment should also be given. And you will be thinking, but sir, does it mean that we are making the changes in the last year's financial statements? In a way, yes. But those changes are not made in the last year's financial statements. Those changes are made in the current year's financial statements in respect of the last year's information. Understood? Yeah? So two more points we have discussed. That if a segment was reportable in the last year based on threshold, it will continue to be reportable even if it doesn't meet the threshold in the current. Number two, if a segment becomes reportable in the current year based on threshold which was not reportable which was not reportable in the last year, even then comparative information for the reportable segment is required to be given. Clear on these two parts? Yeah, clear on these two parts. So I would suggest you to write down notes for this. See, all of these points are given in the study material, for which I am also given you the page reference. If you are making your notes by referring to the study material, you can just mark these points over there. These points are given over there. If you are making your separate notes, the way we have been discussing, yeah, I'm just putting down all of these information in a summarized manner. You can also use it in the same manner. Whichever way you think is easier for you to understand it. Okay. So now we can pick up illustration number 1. And this is the one which needs to be solved by you. Okay. This needs to be solved by you. So you can all go to page number 1, page number 1.59. Then we'll check page number 1.59, illustration number 1. Jameel has a query, sir. Any criteria up to which period, how many years it should be reported further? Only up to the next year. So let's understand this. Say in 2018-19, S1, S2, S3, S4 were reported. This was also reportable. This was also reportable. This was also reportable. And why were these reportable? Why were these reportable? These were reportable on the basis of thresholds. So this was reportable basis threshold. 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 Okay. Now, when we move on to the next year, S1, S2, S3 become reportable. Become reportable. Again, basis the threshold of the current year. But this segment number 4, this becomes reportable not on the basis of threshold, but because this was reported last year. So what's the rationale? Because reported last year. So now, when we move on to the next year, say 2020-21. 2020-21. Now, in the next year, let's suppose S4 doesn't become reportable. Now, the standard says if the segment was reportable last year. Why? Because it met threshold. Only then it should continue to the current year. This segment did not become reportable because of threshold. But why? Because of some other reason. Then it will not continue. If, let's suppose in the next year, this also doesn't meet the threshold. So will this be repeated? Yes. Why? Because of comparative year information. And these two, let's suppose, meet the criteria. Understood? Manish is asking, sir, 10% or 75%, whichever is higher, plus old continues if needs. You can say that 10% to be checked first. Don't say 10% or 75%, whichever is higher. First of all, you will check 10%. Segments identified basis 10% to be tested for the 75%. These two steps will give you the final reportable segments. And then you will check last year if anyone was reported or not. If that was reported, then it will continue to be reported in the current year. In fact, that can also become the basis for you to check your 75% criteria. Yeah, Jamil is clear on this. Kamal is asking, sir, do we need to disclose that it doesn't meet the threshold limit? Yes, you can definitely give a footnote in the disclosure information, or maybe a note in the disclosure when you will give the disclosure related to segments. Okay. So can you all start with illustration number 1 now? Start this one. Huh? This needs to be solved by you quickly. Chief Accountant of Sports Limited gives the following data regarding its 6 segments. M, N, O, P, Q, R. So there are 6 segments. We don't know whether these are business segment or geographical segment. Yeah. As of now, we don't need to get into it. Because that is a separate part which I haven't really touched upon. I'll get on to that part slightly later. For these segments, assets, results, revenue, all of this information is available, and the same information is also available for company as a whole. Chief Accountant is of the opinion that segments M and N, they will be reported. Is he justified in his view? Discuss. In fact, forget the Chief Accountant. What we can do is we can just do this assessment independently on our own, and we can, on the basis of our independent assessment, check which all segments out of these 6 will become reportable. Yes, over to you. Quickly, over to you. Which all segments out of these 2 will become reportable? Saying I'm clear, sir, very good. And I'm just hoping that you're solving this. I'm waiting for a response. Out of these segments, which all segments will become reportable? Yes. Are you done? Start sharing your responses. Huh? If you're done. Okay, I think Kamal has solved this. Kamal is saying all are reportable except R. So Kamal has solved this. So Kamal is saying all except R are reportable. What about others? Waiting for a response, huh? Okay, great. Sakshi is saying M and N are reportable segments. No, Sakshi, you don't need to comment about this chief accountant. You need to tell me which all segments are reportable. Okay. Manish is saying on the basis of assets M, N, O, P, Q. So that means assessment of Manish is also saying that R is not reportable. Is that correct? The Rama is saying, oh no, so you are giving me the criterias and answer according to the criteria. Give me the full answer. Out of this, which all are reportable and which are not? The one which Kamal gave me. Huh? Give me the complete solution. Which all will be reportable and which all will not be reportable. Quickly. Visualizer. Along with M and N, R is also reportable. Okay. So are you saying three segments are reportable? M, N, R? So I'm just thinking that I think we'll need some more time. Yeah. Okay, so take a minute or two. And then you can just get back to me. So I'll wait. No problem. You can just check it and then let me know. Okay, great. So finally, Sanjay has given me the answer. Sanjay is saying all are reportable. Okay. Jamil is saying all except R are reportable. Very good. What about others? I'm just hoping that you have done this assessment for all. Huh? Okay, great. So I think all of you except Sanjay are giving the same answer. Huh? That all except R. Manish is also saying all except R are reportable. What about others? Sakshi is going with the response of Sanjay. Sakshi is saying all are reportable. Priya is saying all are reportable except R. Okay, no, she has given the bifurcation. So Priya is also saying all are reportable. Okay. What about others? Any more responses? Okay. The Tetre is also computed. Is saying all need to be reported. Okay. All need to be reported. So let's go to the solution. Yeah. So let's assess all of them one by one. M, N, O, P, Q, R. Assets. Assets of M is equal to 40. 40. Yeah. So 40 divided by 200. What do we get? 20%. 20%. Correct? So is this reportable? Yes. It's greater than 10%. and of course is greater than 10%. Oh, this is also greater than 10%. P, this has to be at least 10%. So 20 is 10% of 200. So P and Q are also reportable. So now, do we need to check regarding MNOPQ on the basis of revenue or on the basis of results? No. When we already got to know about M becoming reportable as per one of the criteria, we don't need to check this. This is not required. Why to waste time? This is again not required. Not required, not required, not required. Why am I saying not required? Because we are not required to check it. Looking at each and every criteria. Is there any such requirement in the question? No. Question is just simply asking to check which all are reportable. So if they become reportable, let's close it over here. Yeah. Don't waste time in the exam by assessing it on the basis of all the criteria. It's not required. We are only worried about R. Because if R is not reportable as per assets, we need to check it on the basis of revenue and results. So let's pick up results. For results, what is the figure for R? 30. And this should be greater than or equal to 10% of profits taken together. 50 plus 10 plus 10 plus 30. 100. Absolute figure is 100. Or 190 plus 10. 190 plus 10, 200. Its absolute figure is 200. Whichever is higher. So whichever is higher means 200. So 10% of 200 is what? 20. So 30 is greater than equal to 30 is greater than 20. Yes. So basis this results criteria, what do we get? That R becomes reportable. R becomes reportable. So R has become reportable on the basis of the criteria of results. Now tell me, in the exam, do we have so much time that we waste it now by checking the criteria as per segment? No. Next, because all the segments have become reportable, so do I need to get to the step 2? What was step 2? That all the segments taken together which are reportable should touch at least 75% of total revenue of the company. When all the segments have got covered, what does it mean? That 100% of the revenue is now getting reported. So do I need to waste time by getting on to step number 2? No. So that's why in the exam, just go to the point which is asked. Be very, very specific and relevant. So in this case, on the basis of this assessment, what do we say? That all the segments are reportable. This is for sure that you will have to specify that M and OPQ are reportable on the basis of assets criteria, for which you should also give the explanation. And R is becoming reportable as per the results criteria. Okay, all of you clear on this? Yeah, clear on this? Clear on this part? Then I'm just looking at a few questions. I think this illustration number 3 you should mark for your homework. There are few tricky points which are involved in this. You may not be able to solve it, but let's see whether you are able to solve it or not. So illustration number 3. In any case, we will solve it, but it will be great if you can just try to solve it on your own first. Okay? Yeah? Clear? So with this, we can just conclude our discussion for today. And in the meantime, I can see some of your queries. Rama is asking, sir, is it required to explain the reason why all the reportable segments? Yes, you have to specify the way it's given in the study material. That these 5 becoming reportable as per assets criteria, this one becoming reportable as per the results criteria. Just go to the solution. Only this much solution you need to give up. You don't need to get into the computations. That is not there in the solution. Okay. And that also depends on the weightage. So she is saying, in case of loss, what shall I do? I didn't understand the query. Need to be clear. Huh? What is it that you are asking? Ria, I'm hoping you are clear on this part. Yeah? Ria, I'm hoping you are clear on this. Ria is asking, sir, what if a segment is reportable on the basis of one criteria and not reportable on the basis of other 2 criteria? See, as I told you, for a segment to be checked whether it's reportable or not, any of those criteria can be met. Okay, you can see it. This clearly answers your question. R is not reportable as per assets criteria, but it is reportable as per results criteria. So we are calling it as reportable. If any of the criteria is met, the segment will become reportable. You don't need to check all 3. You need to check any of those. There was or, you remember? Yeah? Clear? All of you? So with this, we can just conclude our discussion for today. And we are not yet done on this accounting standard as yet. So there is some part of the standard which is still left. So we'll wrap up hopefully the remaining part of the standard in the next session. And we'll also see if the things go perfectly as we planned, then we'll also be able to start a new topic in the next session itself. Otherwise, next session will be good. All right. Yeah. So thanks to all of you once again for your time today and for your wonderful participation. Please make sure that you revise whatever we have discussed today. That's very, very important. And just try to attempt this homework. Okay. Even if you are not able to solve it, don't worry. Don't think that the concept is not clear, because there are a few more points which are involved in solution which I have not discussed with you, which will be discussed in the next session. But idea is just to make you practice. That's it. All right. Yeah. Thanks so much. Thanks all of you.